All right, we're diving straight into a crisis that has just exploded onto the world stage, sending a massive shockwave from the single most critical energy choke point on the planet. Forget earnings, forget what the central banks are doing. This is about the physical flow of energy that powers our world being slammed to a halt. The fallout is already here, and the consequences, well, they could define the global economy for a very long time. Let's get right into it. If you're looking at any financial screen right now, it is just a sea of red. And this isn't some small dip, what the analysts like to call a healthy correction. No, this is a gut-level, panic-driven response to a huge shock. We're talking about wealth just being erased in real time as everyone, traders, algorithms, you name it, is hitting the sell button at the exact same time. The feeling driving all of this is pure, raw fear, and it's spilling over into every asset class imaginable.
And it's the sheer speed of this sell-off that has everyone on edge. We're seeing major indices from New York to Tokyo gapping down. That means they're opening way lower than they closed, with basically no trades in between. In some places, it's so bad it's actually tripping the circuit breakers, those automatic systems designed to stop a complete freefall. So yeah, this is not a slow burn. This is a wildfire ripping through portfolios. Which brings us to the big question on everyone's mind. Why? What on earth could trigger something this bad, this fast?
And here's your answer. This chaos has nothing to do with a bad quarterly report from a tech company or some weak data out of Europe. All the economic fundamentals we were all obsessing over last week, they're completely irrelevant now. The engine driving this whole crisis is geopolitics, a sudden, violent flare-up in the Middle East that has hit the global economy right where it hurts the most. So to really understand this global panic, we have to go right to the epicenter. And it's not on Wall Street, it's a tiny strip of water in the Persian Gulf. This is the story of how the world's most important waterway was completely paralyzed almost overnight. Let's be crystal clear about what we're talking about here. The Strait of Hormuz. At its narrowest, it's only about 25 miles wide. And yet, through that tiny little passage flows a staggering 20% of the entire planet's daily oil supply. Just think about that for a second. 1/5 of the energy that powers our cars, our factories, our entire way of life has to squeeze through this one single choke point. It is, and this is no exaggeration, the jugular vein of the global economy. And right now, it's been clamped shut.
The speed of this collapse is just stunning. This wasn't something that built up over time. It was a lightning strike. It all kicked off over the weekend with some military strikes that really dialed up the tension. Then, on day one, Iran's Revolutionary Guard put out a direct warning, basically a blockade. By day two, the market got the message. The big players, the oil giants, the trading houses, they didn't wait around. They suspended all transit. It was too risky. And the final nail in the coffin came on day three, the insurers. When the maritime insurance market cancels your war risk coverage, it's over. It's commercially impossible to go through. The strait was officially closed for business.
And this right here is the immediate physical result. This is not some abstract financial problem anymore. Right now, there are over 200 massive ships, oil tankers, natural gas carriers, just sitting there at anchor, going nowhere. It's a giant floating parking lot full of stalled energy, billions of dollars in cargo, and a huge piece of the world's energy supply just stuck in limbo.
So the bottom line is this. The entire system has seized up. It's not slow, it's not delayed, it is frozen solid. The flow of energy out of the Persian Gulf has stopped. And this isn't a problem you can just wait out for a day or two. The entire system that makes this trade route work, the logistics, the finance, the insurance, it's all been broken.
Okay, so we've covered what happened. Now let's really get into the numbers to understand why this matters so much. The data behind this one tiny 40-kilometer wide waterway is the key to understanding why the markets are in a total panic. And it's a fair question, right? The world is a big place, lots of shipping routes. So why does this one strait getting blocked send the entire global economy into a nosedive? Why can't we just, go around it? Well, the next few slides will answer that with some pretty undeniable data. Here it is. This is the one number that explains this entire crisis. 20 million barrels of oil every single day. That is an almost unbelievable amount of energy that up until this week just reliably showed up. And as of right now, that number has effectively dropped to zero. This isn't a small disruption. This is like one of the world's biggest oil producers. Think Russia or Saudi Arabia just vanishing from the market instantly.
Now, let's put that 20 million barrels into context, because this is where it gets really stark. We're not talking about 20% of Middle Eastern oil. We're talking about 20%, a full one-fifth, of the entire world's daily oil consumption. Every fifth car, every fifth factory, every fifth airplane on this planet is powered by oil that has to get through the strait. Taking that piece out of the pie is a catastrophic shock to the system.
And the crisis isn't just about oil. This is a double-barreled energy shock. The Strait of Hormuz is also the main way out for Qatar, which is one of the world's biggest producers of liquefied natural gas, or LNG. So now you have over 21% of the entire global LNG trade trapped as well. For countries in Europe and Asia that depend on LNG to heat homes and run power plants, this is an absolute nightmare.
So this energy is coming from the heavyweights of OPEC, Saudi Arabia, Iraq, the UAE, Kuwait. For them, the strait is the main highway to their customers. Now, you might be thinking, what about pipelines? And that is the crucial point here. The other pipelines they have simply cannot handle this kind of volume, not even close. They were built for small bypasses, not to replace the 20 million barrels a day that are now stranded. So we have this unprecedented supply shock at the epicenter. Now let's follow that shockwave as it spreads across the entire world. In this section, we're going to connect the dots from the chaos in this narrow waterway all the way to the price of gas at your local pump. And yeah, even to the food on your dinner table.
This is exactly what a panic looks like in the energy markets. This second trading opened, the reaction was just violent. WTI, the US benchmark, jumped over 11%. Brent crude, the global benchmark, exploded by 13%, blowing right past that key $82 a barrel level. Look, a single-digit move in a day is huge. A double-digit move? That is a sign of extreme fear. It's a desperate scramble for supply that might not be there tomorrow.
And this energy shock immediately translates into pain for specific parts of the economy. Aviation stocks are getting hammered. Jet fuel is a massive cost for them, so a 13% spike in crude just crushes their profits. Shipping and logistics are facing a double whammy, higher fuel costs and huge rerouting issues. And then you have sectors you might not immediately think of, like chemicals and fertilizers, which use petroleum as a core ingredient. Their costs are just skyrocketing.
Now, while the entire global economy is feeling the shock, the center of the economic pain isn't in North America or Europe. The real, direct, existential threat is focused on one specific region of the world that is staggeringly dependent on this single waterway.
This slide tells a pretty scary story. A massive 84% of all the oil that flows through the Strait of Hormuz is heading to Asia. Just let that sink in for a minute. This isn't a problem that's spread out evenly. This is like a targeted missile aimed directly at the heart of Asia's biggest economies. For them, this isn't just about prices going up. It's about whether they can get the supply at all.
And let's break that down. We are talking about the world's factory, China, and the tech powerhouses, Japan and South Korea, who depend almost completely on imported energy. Then you have India, a huge, growing economy that imports almost 90% of its oil, and half of India's entire supply comes through this one strait. For a country of 1.4 billion people, that is a catastrophic vulnerability. Even smaller economies like Thailand are on the brink. When 60% of your oil supply route gets cut off, the damage is immediate.
And this is where the crisis transforms from being a problem for oil traders into a problem for every single one of us. An energy price shock of this size is basically rocket fuel for widespread inflation. Why? Because energy is the master cost for the entire economy. When its price spikes, the cost of making and shipping everything else goes right up with it. And this is where the predictions start to get truly frightening. The jump to 82, that's just the initial shock. If this blockade holds, every major bank is now modeling for Brent crude to blast right through the $100 per barrel mark. And some of the more extreme but still plausible models are forecasting oil at $130, even $150 a barrel. Prices at that level would act like a massive tax on the entire global economy and just grind everything to a halt. This whole situation is drawing some deeply uncomfortable comparisons to one of the worst economic periods of the last century, the 1970s oil embargo. The parallels are just chilling. You start with a geopolitical supply shock. Check. That triggers spiking energy prices. Check. That, in turn, unleashes runaway global inflation. And in the 70s, that combination led to a painful global recession. We are staring down the barrel of that exact same sequence of events today.
Okay, the situation is grim, the data is alarming. So what does this actually mean for you?
In our last section here, we're going to bring it all back to a practical level. This isn't about trying to predict the future, because nobody can. It's about understanding the key things to watch and having a framework to navigate the crazy volatility that's coming our way.
Think of this as your crisis dashboard. There are 3 key real-time indicators you should be watching right now. First, the vessel counts. Are ships starting to move again? Even just a few. That's your first sign that things might be de-escalating. Second, insurance premiums. If insurers start offering war risk coverage again, that means the commercial risk is going down. And third, listen very carefully to what OPEC Plus is saying. They have extra capacity, but it doesn't matter if they can't ship it. Their commentary will tell you everything.
In an environment like this, you have to understand where the risk is. On one side, you have sectors that might actually benefit from higher oil prices and instability, like energy producers and defense stocks. But on the other side, you have what are now highly toxic sectors. Any business that's heavily dependent on fuel costs, airlines, shipping, logistics, is facing a serious crisis. It's time to take a hard look at your exposure to these industries. And this is probably the most important takeaway of all. The natural human reaction when markets crash is to panic and sell everything. That is almost always the worst possible move. Professionals don't panic. They reassess. They're calmly looking at their portfolios, identifying the weak spots, and making smart adjustments. This is about managing risk, not reacting to fear.
So here we are. The initial shock has hit the system, and the next 2 days are going to be absolutely critical. You can bet that diplomatic channels are on fire, military forces are on high alert, and the markets are just balanced on a knife's edge. What happens in the next 48 hours will likely set the trend for the rest of the year. The only question left to ask is, are you prepared for what comes next?